Hello and welcome to another episode of Blue Alpine TV. In today's episode, we will talk about the market capitalization of the cryptocurrency market and whether we can draw some parallels to other securities and other, let's say, equities, in general equity market. So we look at the market today in general, quite positive, quite green. It looks like the worst is over in terms of crises. However, there is still this magic number of around 11,500. If we look at the GDAX chart here, it looks like it's going up. The volume is a bit low though on this 6-hour chart. If we switch to the 1-day chart a bit, we can see that here the volume was a bit higher, here it was a bit higher, but here it's getting lower again, but I think it's building up in a healthy way. But the big question will be, will we be able to cross this magic line of 11.5, around 11.5, 11,600, and then we should be good to get back to a strong bull run. Now, I want to start this first news story with a tweet that I've seen from Vitalik Buterin. He's saying, reminder, cryptocurrencies are still a new and hyper volatile asset class and could drop to near zero at any time. Don't put in more money than you can afford to lose. If you're trying to figure out where to store your life savings, traditional assets are still your safest bet. Now, this gave me a bit of food for thought, because a lot of people are asking me, how much should I invest after I've read your research papers, because I want to invest into X, Y, and Z. And generally, we go about this same philosophy. So we say only invest money you can afford to lose. Do your own research, read our research reports, but still there is no sure way of or safe way of saying this will go up and this will reach X percent, this will give you X percent of gains, and all of these things. So we believe you should diversify your portfolio. You should have a certain percentage in cryptocurrencies. This depends on your risk profile. This depends on your age. This depends on your income and all of these things. But that being said, I would say the younger you are, the more you can technically can afford to lose. So you can invest a higher percentage of money you would like to invest. But the older you're getting and the more stability you need in your life, the lower we would set the cryptocurrency part here. That being said, we do believe that cryptocurrencies should be part of a diversified portfolio and shouldn't be missed in any diversified portfolio. Now, I want to show you something interesting that caught my mind, and this might be a bit far-fetched, but I think it's actually not that far-fetched if we think about it. So we're currently looking at a market capitalization of around 500 billion US dollars. A couple of days ago, this was 200, 300, maybe 400 billion US dollars. And if we look at even, what was it, about a month ago, maybe 6 weeks, we looked at close to $1 trillion in market capitalization. Now, if we compare this to something, for example, the mutual funds. So currently the wealth or the total net assets of mutual funds in the US are 16.3 trillion US dollars. However, if we go back in 1989, and between 1989 and I want to say 1994, so between those 5 years, or let's say between 1984 and 1989, mutual funds, so the money market funds that we can see here, were between 200 and 400 billion US dollars. This market grew almost 60-fold in the last, about 30 years now, and this could be very well comparable to the cryptocurrency market. Now, I know this is a bit far-fetched and different time, different circumstances and different things. However, if you think about only the timing and the atmosphere of where people were investing. So in 1984, between 1984 and 1990, people were investing mainly in equities such as stocks And bonds also grew immensely here, as you can see from this number. The money market funds only doubled in size and then didn't even grow for a while. So it only, I want to say, tripled in the next 10 years. Whereas stocks actually almost, almost close to 20x'd that number in the same amount of time. So equities were and still are probably for a lot of people very interesting. But we believe that cryptocurrencies, from an investment perspective, from a general market capitalization strength, might be what mutual funds were in 1989. So it could very well be that, let's say, if the global economy or if the US economy takes a certain hit and it goes down, it might be that cryptocurrencies might be somehow or some kind of a safe haven in terms of investor money. And there is definitely a paradigm shift in how cryptocurrencies work. So we can't say for sure that this market size or market capitalization is what it's cracked to be. So maybe cryptocurrencies will stay at this market capitalization of 500 billion. Maybe it will cross $1 trillion this year. Maybe it will cross it in 10 years. So nobody can know this. And we obviously can't say that we do know, so because we don't. But that being said, I think it's quite interesting. So if we look at mutual funds today, and that's about almost 30 years after when the mutual funds started having real big growth. Mutual funds today, the total assets worldwide are 40.4 trillion US dollars in 2016. Around 18.9 trillion came out of the US. So that's even more than 60x the entire market. And if you just imagine, put yourself into the shoes of an investor from 1989. If you knew that mutual funds would get the amount of growth, this could be, on one side, obviously life-changing amounts, but just the sheer implications, the sheer touch points of all of these things, you would definitely be excited about the future. Like if you were invested in mutual funds, the amount of people getting touched by mutual funds from an investment perspective was huge. Now, take this mindset into cryptocurrencies and apply this in a much more wider sense. It will happen more globally, much more faster, and it will touch a lot of people that, for example, weren't really touched by mutual funds. Because mutual funds, unless you're, I want to say, in a Western country and had a certain amount of money, mutual funds weren't really interesting to you. Cryptocurrencies can very, very well be interesting for a third world country where money exchange is still a problem, but people still have mobile phones. So money exchanging or cash exchanging will become more cumbersome. And if we get to the point where cryptocurrencies will jump over the banks and go directly from person to person, so peer to peer, all of these things, like the sheer amount of implications this will have, if you just think about this could be very, very well be the next mutual fund trend, if not even bigger. So keep this in mind when you're investing, when you're building your investment thesis, when you're building your portfolios. So could, for example, cryptocurrencies reach this amount of money in the next 20, 30, 40 years? If yes, how would you change your investment approach? So this is a bit of a I want to say philosophical episode where we really dive into the psychology of a long-term investor. Obviously, we provide you with the fundamental analysis, but what you're doing with this is up to you. So if you're reading these reports on bluealpineresearch.com, and if you really believe in the power of these companies, then think about the next 10, 20, 30 years and invest accordingly. So really think in a way that cryptocurrencies will touch a lot of people it could very well have the same amount of growth, if not greater, than mutual funds. And how would that change your investment philosophy? So with that, I want to end today's a bit philosophical episode. I think it's important that you think about these things, that you make that you really put these things, these numbers in perspective, because we are so much in the news, in the dailies, in these analyses, in these research reports, that we sometimes tend to forget what the big picture here is. So from an investment perspective, this could be much, much bigger than you think. So apply more patience, and from an implication and touching point or touch point perspective, this could be much, much greater. So also think about the philosophy factor of what is happening now. So what kind of evolution or revolution is happening, not only in finance, but the worldwide industries. So with that, I want to end today's episode. Make sure to like this video, subscribe to the channel, and I'll see you on the next one tomorrow. Bye.